Welcome to Bears in Exile. Today is May 31st. We're going to be looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And as always, we start off with the Dow daily. And we had a very nice day in the market. We did gap up above the upper channel line, as we said, was a possibility if they didn't want to fight it the old-fashioned way, and sure enough, we got that today. And it is a nice big green continuation bar, so at face value, this looks like it should go up. All of the secondaries are either up or turning up, and it does look very, very bullish. Not much to say beyond that until we get into the currencies. And the SPX, we did also gap up above all the resistance that we had talked about before. The neckline, everything just jumped right above it. Continuation bar looks very bullish, just like the Dow, everything pointing up. On the VIX, a little bit different. Do have further expansion of the short-term moving averages pointing down, and this could be classified. At earlier in the day, it certainly was a hammer, an inverted hammer, I should say, and now it still meets that definition because the wick is much longer on the top than either the body or what's on the other side. So perhaps a side tick to an uptick could happen, certainly after a very big day. It's entirely possible, depending on how much momentum is on the bullish side. I would assume that it's very strong because it went over those key areas. So, this should be a larger red candle to match up with the Dow and the SPX, but it is not. So, something to be thinking about is also in the $15 range. Certainly could get down to 14 again or lower, but I don't exactly like this. You have a hammer and a fat inverted hammer, so reversal, potential reversal. TNA had a massively strong day, and this one actually does correspond more with the VIX. We have crossover on the short-term moving averages. This was a huge move, and it ended up with a hammer. Of course, it is way outside of the upper channel, and everything is pointing up once again. So, but that hammer gives me a little bit of pause, but certainly momentum should be on the side of the bulls. But as always, I'm leery no matter what. If it had gone way down here, I'd be leery. Up here, I'm leery. So caution is always the order of the day, especially when everyone is cheering. Now for the movers and shakers of the market. We had news about Europe getting a second bailout deal for Greece, made the markets go berserk, and the dollar just fell. Now here's the interesting thing. We are outside of the lower Bollinger Band. We do have, bearish long-term moving averages, took some damage, got thrown back out. We have a recrossover of the short-term moving averages, all of which looks, bearish, but it is outside that Bollinger Band. Very, very, not what you want to see. At the very least, it should move sideways in some fashion to get inside the Bollinger Band again. But, every time it goes outside, it gets thrown back in. Where's another example? It's a rarity. Outside, thrown back in. Outside, thrown back in. And outside, thrown back in. So certainly I would be looking for that. Conversely, when we look at the FXE, the euro, outside the Bollinger Band. So not as much as the dollar, but outside. So I would also be looking for that to move sideways or down to get back inside. We still have the bullish long-term moving averages. They have taken considerable damage, and the short-term is moving back through it with a crossover. And all the secondaries are pointing up, giving further evidence that that this should move up more, but definitely that Bollinger Band something to be thinking about. GLD, we have a spinning top. I hate spinning tops. Other than that, it looks bullish still. Everything up or close to up. And it was a red day. Even with the dollar sinking as much as it did, devaluing the price of gold, which should have pushed it up, it did take a little bit higher, but it was negative for the day. I would have thought that it would have been a much larger green candle. Perhaps the lack of fear is what made it red. That is my theory. And the same with silver, which is a hanging man. And of course we have a flat line of the bullish long-term moving averages, and the short-term moving averages are trying to be bullish, crossover, and go through it. But as always, a hammer or hanging man at the top of a possible range is something to be aware of. But overall, the bulls certainly did pull off a coup, and the technical damage that was done today is significant, and there's no way of ignoring it or minimizing it. At the very least, we're going to need, actually did have, here's the channel line, came down for a retest and bounced. So should we expect another retest in the next few days? Yeah, it's possible. The bulls don't want to see too many retests of it, because then it could break back down through it. But it does have a good distance between the two, and is not something that I would be especially counting on in the short term. Perhaps the intermediate term it could do it, but certainly not soon. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.